Mastercard is very misunderstood. A lot of people think Mastercard is just a credit card company that takes a small fee from each transaction. But what if I told you that there was a silent part of the company that could soon overtake the core business model? So today we're going to be talking about that mystery segment and a lot of other parts of the business that is growing rapidly. Before we get started, this is not financial advice. Always do your own research before investing. Let's go. So everyone's heard of Mastercard. It's the company that allows two people to transact between each other. But there's a completely different side to the business, VAS, or value added service. So what is value added service? Mastercard's value added service is essentially anything beyond the processing of a payment. It's the layer of security, intelligence, and data. It sits into four main pillars: security and cyber, data and analytics, digital and authentication, and loyalty and engagement. So, security and cyber solution is VAS's largest and fastest growing segment. This part of value added service makes money from licensing and usage fees. How this essentially works is the banks will pay a transaction fee each time Mastercard thinks that a payment has a risk of fraud, and with billions of transactions, this will add up. And fraud is a growing concern. In just 5 years' time, it's expected that fraud will increase by 141%, which makes it imperative that banks have this feature. Mastercard also has recorded futures. Recorded futures is essentially an online radar where instead of tracking planes, this software can record criminal activity across various different platforms. So how does this work? Now, let's say a hacker from Pakistan is talking on the dark web about hacking into a bank's online app. Now, Mastercard will let that bank know and give them a risk score depending on how serious they think the situation is. And from that, the bank security team can act on this. And the customers for this are massive. The second part of value-added service is the data and analytics. The data and analytics that they sell can allow companies to use this information to devise strategies for their products. And again, their customers are not just normal people like you and me. They sell this data to big governments and big companies around the world. Digital and authentication solutions is also massive for value-added service. In the current world, a lot of people are moving from physical cards to online payment features like Apple Pay and Google Pay. Now, banks will have to pay a small fee each time someone decides to add their card to Apple Pay or Google Pay or even any other wallet. And they also charge a small fee on each tokenized payment on top of the normal network fee. And finally, the last part of value-added service includes their loyalty program. This part of the segment has provided more than 54 billion in rewards annually and provides consumers with access to things like lounges and travel perks. So all in all, value-added service is massive for the business. With the core payment part of the business being largely transaction volumes, value-added service is mainly a subscription-based model that Mastercard can provide to its customers. This means better recurring revenue, higher margins, and is also not linked to spending cycles like recessions. And this part of the business has truly been taking over the company. With the last 3 quarters, it made up more than 40% of the overall business. We can see that there's been a rapid expansion in the service. Since Q2 of 2025, they've been growing over 20% year on year each quarter. On Friday, the markets dipped due to inflationary pressure, but Mastercard was one of the few companies to be up in the day. And the reason is because Mastercard is not as affected by inflation as other companies. And the reason why that is because Mastercard charges a percentage on each transaction. So if the cost of a coffee goes from $3 to $4, then their fees will go up as well. And that will actually offset the slight consumer decline in spending during inflation periods. And even during recessions and inflation, people may cut back on luxuries such as holidays or a brand new car, but they will always need things like fuel and food. So the business is essentially a money-making machine no matter what economic cycle we're in. And this is one of the reasons why Mastercard may be one of the best stocks to buy currently in the market. With the rising concerns for inflation due to things like the war in Iran, in 2022, inflation hit 8%. The S&P dropped 19.4%, and Mastercard fell just 2.7% in that same period of time. And their revenue growth was very strong as well, even during periods where there was high inflation in 2022, and the Fed increased rates to 4.5 basis points. Mastercard's revenue grew 17% that year. And for this reason, this is why Mastercard is such a premium stock and why it trades at such high valuations. And Mastercard is currently down 13% year on year and 18% down from its all-time highs. So let's understand why that is. One of the reasons is Trump's interest rate credit card caps. Trump proposed capping credit card interest rates at 10%, which sent stocks like Visa and Mastercard tumbling on the day. This is a bigger issue for the banks that lend the money, and not the companies that provide the network for payments. Mastercard earns a fee on each transaction, so it doesn't matter what interest rates are set at. The market is punishing Mastercard for something that generally doesn't really affect the company. Another reason why the stock has declined is because of competition. Europe is currently developing its own processing payment network called Wero. What Wero is essentially, let's say you go to the shops and when you pay, instead of tapping your card, you scan a QR code and pay directly through your bank. This way you pay less transaction fees on each payment. And this method of payment has actually been quite popular in places like Asia. However, it's never really taken off in the US and Europe due to Mastercard and Visa. But it's not that simple. You can't just charge lower fees and expect everyone to start using the app, because Mastercard and Visa have developed a massive consumer network. There is also no security when it comes to Wero, where if a merchant doesn't provide you with the goods or service, then consumers are left hanging, where they won't get their money back. And I think the fear of this is very overblown. Visa and Mastercard still make up 96% of payments in Europe. And there's also no reward when it comes to Wero. I myself personally love using my Amex to claim back money from points or air miles, whereas you can't do the same with Wero. And there's also the problem with profitability with Wero. Because it has very low transaction fees, who's going to actually be able to run all the network that processes these payments? Another reason why the stock has declined is because there's been a broader uncertainty in the market with things like global tariffs, the war in Iran, and inflation creeping up. Things like this means that consumers are spending less, which could hurt the core business model of Mastercard. However, even with this, I think Mastercard is currently one of the best companies you can buy in the market. With the risk of inflation and Fed interest rate hikes, Mastercard is one of the best companies you can buy in the stock market right now. It is one of the best hedges against inflation and Fed interest rate rises. And I think the price of the stock is so attractive right now. With the possibility of a margin expansion and the actual growth of the company, we could see some insane growths in the stock price. And to truly understand that, let me quickly show you something. So Mastercard is currently trading at around 28 to 29 times price to earnings. And the stock is historically traded at around 37 times. So that just shows that it's currently well undervalued for its 10-year historical average. So Mastercard is expected to grow their earnings by 20% this year. And if the sentiment around the stock shifts, then let's see what that could mean for the price. Depending on how well the company grows and how much the sentiment shifts around the stock, we can see as much as 69% growth in the stock price. And my price target for the stock is $650 for the end of the year, which I think is very much doable for the stock price. If they hit 20% growth on EPS and also the sentiment around the business changes, then I think that's very much doable.